This is a key inflation measure closely watched by the Federal Reserve. Equity markets reacted negatively, with the Dow Jones dropping 712 points. I think that we can continue with this upward structure. Hi everyone, I'm Isa Martinez, trader and analyst here at Xchief. This week, the markets are filled with opportunities and major trends to watch. From Bitcoin breaking records to volatility in the dollar index and gold, we will dive into the fundamentals and perform technical analysis. Whether you're a beginner or an experienced trader, this analysis is packed with insights to help you stay ahead. Let's get started. As always, we start with the economic calendar. Don't forget that these hours are based on the New York session, the New York trading session, GMT-5. We will start with Tuesday, January 14th at 7:30 a.m. The core PPI measures changes in the prices producers receive for goods and services, excluding food and energy. This is an important indicator of inflation since higher producer prices often lead to higher consumer prices. The overall PPI, which includes food and energy, provides a broader view of inflationary pressures in the economy. On Wednesday, January 15 at 7:30 a.m., the core CPI reflects changes in the prices consumers pay for goods and services, excluding food and energy. This is a key inflation measure closely watched by the Federal Reserve. The overall CPI includes food and energy and represents the total inflation rate. The year-over-year CPI compares the current level to the same month last year, offering a broader perspective on annual inflation trends. On Thursday, January 16th, at 7:30 a.m., the core retail sales report shows the change in retail sales excluding items like cars, which tend to have volatile sales figures. It is a key indicator of consumer spending. The overall retail sales data shows the total change in sales, offering insights into consumer confidence and economic strength. The weekly unemployment claims report reflects the number of people filing for unemployment benefits for the first time, with a lower number indicating a stronger job market. Now let's continue with the most important fundamentals of the week, and we will start talking about the USD and the gold. On Friday, financial markets saw significant volatility as both gold and the US dollar defied expectations following the December non-farm payroll report. The US added 256,000 jobs, far exceeding forecasts of 160,000. Despite initial sell-offs, gold and the dollar closed higher. Gold surged 0.90% to $2,716, driven by broader concerns like inflation, geopolitical risks, and U.S. fiscal policy under the Trump administration. Meanwhile, the dollar index rebounded from early losses to close up 0.48% and 109.78, reflecting strong demand despite rate stability expectations. Equity markets reacted negatively, with the Dow Jones dropping 712 points, the S&P 500 down 1.8%, and the Nasdaq falling 2.1%. Analysts suggest markets are shifting focus toward hedging against multiple risks rather than purely monetary policy, signaling a potential change in sentiment. Now let's continue with the crypto market because Bitcoin was the best performing asset in 2024, doubling its price and surpassing $100,000, outperforming gold's 26% gain. Expert predicts major developments in 2025, including explosive growth in DeFi, with some analysts expecting it to represent 10% of the crypto market. Institutional adoption, Bitcoin ETFs, and greater regulatory clarity are set to drive the market forward. Key narratives include the increasing adoption of Bitcoin as a financial asset, widespread institutional involvement, and global regulatory shifts. Analysts foresee continued upward momentum for Bitcoin, with price targets between $155,000 to $300,000 by the end of 2025. Bitcoin staking and DeFi are expected to unlock further innovation. AI and stablecoins will dominate the altcoin market in 2025, with stablecoins challenging traditional payment systems and AI integrating into decentralized finance. Meanwhile, meme tokens are expected to lose prominence as the focus shifts to utility-driven projects. Regulatory clarity under the pro-crypto US administration is anticipated to fuel growth with stablecoin legislation and global competition to become crypto hubs, driving further adoption. However, Europe's regulatory environment remains uncertain. The crypto ecosystem is evolving, with milestones like surpassing 1 billion users globally and Bitcoin reaching new highs, solidifying its position as a global financial asset. Analysts predict that 2025 will be pivotal, shaping the future of digital assets for years to come. Now we will continue with technical analysis. As always, we'll start with the DXY. This week we saw a strong upward movement with the US dollar index. As you can see with that arrow, we started the week at 107.752 and we finished the week with 109.966. So basically we had a movement of 2% with the US dollar index. The current structure of the US dollar index is clearly bullish. That means that we are seeing higher highs, as you can see here, and also higher lows here and here. Easy to understand. Now I would like to see which are the new targets for the US dollar index. Maybe the 4 hours interval won't work today, won't work with the things we want to do, because we are going to now try to establish new targets. I think these are the most important targets for the next movements with the US dollar index. The first one is 110.973, 113.148 and 113.942. That means that the US dollar index can continue its upward trend and try to reach each one of these targets. If you are asking me which targets could be achieved by the bearish traders, I think some of them are related to these small fair value gaps. I'll go back to the 4 hours interval, and I think maybe we can start like filling completely these fair value gaps. The first one is located between these 2 points, but as always I will put the specific target that I would like to achieve, and it is located at 107.570. This point of the price, as always, 50% of the fair value gap, means that it is the most sensitive part of the fair value gap, and that means that you can have a higher probability. Other bearish targets for the people who are trading the US dollar and try to follow a downward trend would be here. Here I find a fair value gap, and also I can find a fair value gap here. However, I think this one, specifically this one, is already failed. But okay, I will leave you these targets for you. The first one is located at 108.928, and the other one is located here at 108.247. If you are trying to search for bearish targets, I think these are solid ones. For now, in my opinion, and always remember that this is just my opinion, I think that we can continue with this upward structure, clear upward structure with the US dollar index, and that also means that any kind of other asset that is against the US dollar will be compromised, and that we will see in the analysis of the Euro USD. So yes, you can consider bearish targets, but the most important, at least for me, will be the bullish ones. Now let's continue with the SP 500. As you can see, this week was really bad for the SP 500. We just saw a downward movement, and this kind of movement was not only present in the SP 500, as we will see afterwards. The first thing we need to consider is that yes, maybe we are seeing some weakness with the movement of the SP 500, and we should consider downside liquidity. That means objectives located here like the 5,696, or maybe here that I can see also points of liquidity at 5,615 should be nice points to take into consideration for this week. Although I consider that the SP 500 will continue with an upward trend in the higher intervals, like daily intervals, like weekly intervals, after this pullback to any of these liquidity points, maybe we can continue with this upward movement that I'm telling you. On the other hand, if you are considering an upward movement with the SP 500, obviously you need to take into consideration these points of the price. First of all, located at 6,021, 6,049 and also the all-time high located at 6,099. Okay, almost the 6,100 point. And well, if you think that SP 500 will explode in an upward movement, you can also consider this point that we calculated before with the Fibonacci retracement located at 6,198. And now let's continue with the Euro USD. Is one of the worst things that I'm seeing, and that was the thing that we were discussing in the last weeks, and it was that the Euro USD will continue with its downward trend, and it is really dangerous because, as I told you before, if it keeps its downward structure, we can see the Euro USD touching this low located at 0.95, which is a low from 2022. Any kind of movement with the Euro USD, considering what's happening also with the dollar, with the US dollar index, as we were talking before, I think will be to keep this structure, this downward structure. Objectives for this week, I don't think it will be to try to find a new downward movement before a new correction of the prices. I think we should not try to search for a downward movement here because we are too close of the last low in this interval. We can consider some correction from this point, some correction, and after this maybe the movement can give us an entry to make a downward movement, to have a trade obviously with a direction to a downward movement. That means sales obviously. So if the price now is having its correction, I will calculate based on that, and you will have these 3 points to consider a downward movement from here: 1.032, 1.035, and 1.038. This is the thing that I think can be happening if these points are useful, this kind of movement. I think what I'm seeing is not so good for a Euro USD, considering that it can continue its downward structure. And now we will finish with Bitcoin, one of my favorite assets. As you know, I like to trade Bitcoin. The movement that we need to keep seeing and to keep searching now is considering the last movement we had, and it was the manipulation of this low. So if we had a manipulation, you need to know that we can have now liquidity or gas for Bitcoin to make an upward movement. However, this last upward movement, which is just this movement, was too limited. If the price doesn't put some buy volume in this moment, maybe we will have trouble with Bitcoin because it can start falling again. My objectives, at least my first target for any kind of upward movement that I'm expecting, might be to reach this point of the price when I can see a clear fair value gap, and the 50% of it is located at $99,396. That means if I am buying Bitcoin, if I am trying to trade futures in Bitcoin, for example, I will consider this point of the price to take profits, even if my take profits are only partial. I will take profits, and I will also try to cover my position. So keep that in mind if you are trying to trade Bitcoin with longs. Now, on the other hand, what happens if you are bearish with Bitcoin? Okay, so the next targets obviously is the last low located here at $91,187. The next one is here, $90,682. And well, the things can get really difficult for us. We can expect prices like $88,000, $86,000 if the price doesn't have enough volume to continue its upward trend that I need to remind you in the weekly chart and also in the monthly chart. We are bullish with Bitcoin. We have an upward structure in those intervals. So take this into consideration if you want to trade these assets. I don't think this is an easy week because we have a lot of assets that are not giving us a clear structure. Trading, for example, the SP 500 or maybe Bitcoin would be difficult because we don't have clear objectives and we don't have a clear structure to see if we are doing trading in an upward direction or in a downward direction. So keep that in mind if you are trading these assets this week. Thanks for tuning in. If you found this video helpful, don't forget to hit the like button and subscribe to our channel if you don't want to miss the next weekly analysis. And are you ready to elevate your trading game? Sign up with Xchief today and take the next step toward mastering the markets. See you in the next video.